In trading and investing, there's often a saying, buy the rumor and sell the fact. And we could be seeing that this earnings season throughout most of the big tech stocks when they're reporting. Microsoft did well, driven by AI, but still dropped in after-hours trade. And Alphabet's great earnings couldn't quite live up to expectations when it comes to the advertising section. But really, it was AMD as well that was showing us that it is a buy the rumor, sell the fact so far in big tech earnings, with the revenue forecast looking pretty good, but still the stock selling almost 6% after hours. So has this happened before? Well, as we shared in our previous video, we talked about tech earnings plus the FOMC being a critical juncture for stocks over the last 2 periods. And of course, this leads us into questioning what other instruments are we seeing with similar results. Today, we'll be talking about the big sell in the NASDAQ that took us down to the huge demand level, what happens if markets break through this zone, and whether this should be considered a good period to be buying these dips on several stocks that have had massive rallies recently since October of 23. There's a lot to discuss, so let's go through stocks, commodities, and cryptos together right now. Well, welcome back everyone to the Daily Show, where we talk about the macro, the lead indicators, and of course the hottest charts that all of us need to be watching right now. It was a rotation out of semiconductors where we saw warning signs on the horizon over our weekend video, and a rotation into financials and energy stocks. But it was really more of a potential buy the rumor, sell the fact through big tech that we already talked about in the previous video. Yes, we've seen it 2 times before, a tech earnings plus FOMC event that led to a sell and then a rally afterwards. Now, I've done a little bit more research into this, and you'll end up finding out that there's a 20% gain in both of these runs in terms of percentage. And we're right there right now with some interesting data that we'll look at in the video ahead in terms of some similarities to this, especially the July sell. Let's now go through what good signs and bad signs there are for the market. First up, we're already looking at 6 rate cuts this year. We have kind of gone between 6 and 7 rate cuts, and it looks like the Fed might be in trouble from a few things. Remember, they never rate cut out of the goodness of their hearts. They do so because they break something. So when they break something, what have they got to do? Well, they've got to come in and stimulate the economy. And we see core PCE inflation already underneath the Fed's targets. So that's really showing us that we could be in kind of a hard deflationary period, which means the Fed may be forced to cut earlier. And the market's already been preempting this with, of course, March expectations of where we'll see a rate cut. Will we get one in this FOMC? It's unlikely, but you can only imagine how the markets would react. I doubt that's priced in right now. Now, I want to talk about the idea of buying the rumor and selling the fact, because of course, in this case, everybody's actually in one type of investment. You've probably seen it if you've been following along on financials for a while. Japanese equities. Everybody's been on that bandwagon recently. And while the US equities have done incredibly well and it's been a great place to be, Japanese equities have garnered a lot of big institutional flow. Now private clients are purchasing it according to Bank of America in a big way. Is this a great time for it? Probably not if you think about it, because everybody's on that bandwagon. Also, emerging market debt and REITs. And if you know anything about our discussion on home builders, we've seen that REITs have been purchased quite heavily, or at least home builders, over the last 3 to 4 months, giving superior returns even to the market itself. What hasn't been purchased, though, is dividend stocks and obviously tips as well, materials, and a few things that have come up recently in the last week or so. So what else have we been seeing with big inflows? Well, we're going to do a special soon, so make sure to subscribe to emerging markets. And one of the reasons is we've just seen the largest weekly inflows into emerging markets ever, according to Bank of America. That's a pretty big deal, and there's certainly a large transactions going through. But what about another big high, a 10-year high actually, in terms of what we just saw with the skew? Remember we mentioned before the idea that July last year was a period where we had earnings, and of course we also had the big FOMC event. Well, it also turned out during that time we saw a huge imbalance between the overall call skews in comparison to the put skews. And you can see we've got a very similar thing going on right now with a massive call skew to a new high, a new 10-year high, showing us that there could be something that could unwind very quickly. And I think a lot of this is going to have to do with options ultimately, in terms of if we do go into some kind of flash event. And while the markets are still bullish, and we'll talk about that later on with the key level that actually was reached after the earnings events, we do need to be on the lookout for one of these kinds of problems, because you can see here that puts are at their cheapest that they've been in a very long time, according to Goldman Sachs. And that means that people are just not really pricing in any risk. And if people are starting to become complacent, that's the time when you've got to really start to question whether you're going to trade at these levels with nice tight stop losses and good kind of risk management, or whether you're going to say, okay, it's a great time for me to buy on a 10-year horizon. And I think it's probably not the best on the 10-year when you think about pricing, route valuations on a lot of the stocks. Now, some are a lot better. Now, which ones are the worrying ones? Well, of course, it has to do with the biggest ones, the really top 10 to top 7, the Mag 7 to the top 10 stocks. According to JP Morgan, we're getting into that really high weighting territory where you've got to start saying, well, can these companies really hold up? If you've been watching the channel for a while, you'll know that my favorite stock's Microsoft. Do I think Microsoft's cheap right now? No. Do I think it's still a good stock? Absolutely. And do I think it'll be higher than it is right now in a few years' time? Yeah, of course I do. I think it's one of the earliest benefactors of AI technology as it stands right now. But this is another sign that we're going to be looking for in markets, and that has got to do with CTAs. Now, we've already mentioned the idea that if CTAs start to reduce, then we may be seeing a topping in the market. And we already know they're totally off the scale. We've shared this about a week ago and we continue to do so. But I've got another update here. Here's taking an interesting number from basically Goldman Sachs. And you can see that Goldman Sachs are still showing that on their CTA kind of spreadsheets, they're seeing still a high investment. And of course, the huge balance back up into the top. We're looking for this to start to show declines along with price action. And we'll talk about the price action later on, because if it breaks to swing level shorts, then we're probably talking mean reversion, and we'll go through that soon. Speaking of CTAs, we've also got some updates here for Brent, because of course, one of the big reasons why we saw so much selling in oil recently was that CTAs just dumped it, and it was really a buy the rumor, sell the fact. You can see the rumor, and then you can see the fact. And this was all to do with, of course, the conflicts that are going on right now. We've recently seen oil pick up, though. And of course, 78 a barrel was where we expected it to go to. And a breach of this level could expose a new uptick in CTAs that could also, in turn, squeeze the markets. And I'll explain why with options. Take a look at this 71 area in particular when it comes to a barrel, 70 to 71. Now, we talk about 68 being a price action level, and I still think it's key. But there's going to be a huge flip here in terms of options if oil chooses to break through this zone. And this area here could really expose quite a decent squeeze that could occur onto oil. So certainly one to be watching on the horizon over the next couple of weeks. And we've already been talking about it a lot with some pretty decent success from the price action standpoint. Let's talk about positive January. Is it a good thing? Before we panic, before we say, oh, look at that sell, it's nothing really in the scheme of how much it's gone up so far. Should we be looking at buying or selling when we talk about dips? Well, in general, positive Januaries, which we've seen, ends up leading into a pretty good year. And this is from Carson Research. And you can see here that there's some pretty good stuff going on now. We also know that if we're going to see volatility, Feb does tend to be the month based on statistics, based on the market itself. And interestingly, with election years, there's a lot to go through. If we have a sitting president running, we tend to see February also decline into March. So this is the kind of scenario that I guess we find ourselves right now sitting in. Of course, everything could happen this year. And I would say that while we're already seeing hedges for September and October into the November elections, there's going to be a ton of volatility that comes through in the first quarter, and I would think the third quarter of this year. April being a defining moment, though, for the mid-year. And join us as we go through the stats that are really going to surprise you for April, which is only in a few months now. S&P 500 performance, how does it perform from, generally speaking, kind of the back end of January to Feb 15th? Look, if you're looking at the stats, it does tend to be more of a positive period in time. Obviously, you'll notice that this study ends on Feb 15th. Why? Because that's usually where you start to get that negativity coming in on the markets. And to stop a freight train, which is the type of market we're in right now, remember it does sometimes take a fair bit of coiling and sometimes a Wyckoff distribution before it can sell off. And we'll go through that with our price action. Now, a bull is also going to light this year. It's an election year. We've got a 35-2 track record in similar times where we saw a November to mid-January kind of run up. And that's a pretty strong stat. And of course, when you're talking about really strong stats such as this and everything else we've been talking about, you do have to favor the optimism side of things with AI and everything else coming in. Now, don't expect more companies not to be laying off people. It's going to be a huge thing. I woke up this morning here in Australia and I had text alerts everywhere saying this company's laying off, PayPal's laying off, everyone's laying off. And this is kind of what the Fed has engineered. And now they've got to play the delicate game of trying to get the jobs in balance as we see more and more companies selling off, or not really selling off, but getting rid of their employees, and therefore probably becoming relatively more profitable as they're given reasons to be able to sack, let's say, excess employees they don't need. Now, here's an interesting one because it's got to do with kind of a narrative. And obviously, if you know the narrative on China, you would know the narrative is terrible right now. It's actually horrendous, with Evergrande finally going bankrupt and basically being let to, I think there was like a video where they were demolishing buildings and exploding them all. And it's all pretty wild over there. Now, I bring this up because, of course, we saw the tech bust back in 2000, 2002. And then when we saw WorldCom filing for a Chapter 11, we actually saw at that period markets start to bottom off. And we've kind of been talking about this recently with the capitulation we saw in the Hang Seng Index recently, leading in, it was about a week and a half ago now, leading into a period where you often do see weakness and then you start to see strength. In fact, 6 months and 12 months later, the market was pretty favorable in the bullish side. So when you're getting these types of lows in markets, you do want to be thinking about it. Now let's move over to Tesla, because this is the one that a lot of people have been messaging us about and obviously been discussing it on the internet. Will it recover from its brutal sell-off? Well, it has to, really, because every other time it's done a 5% or more gap down sell-off off a 6-month low, it's recovered over the next 30 days. Now, that's a 100% track record with the stats we have, obviously limited stats, and the 18% was the median of the returns. So you're looking at Tesla saying, well, it should go up. Well, theoretically, yes, it would be good for it to go up because that would show you that the elastic demand's there and that people still have a lot of faith, obviously, in Tesla moving forward. So Tesla bulls will be looking for rotation into the stock, and we'll go through the charts a little bit later on. In terms of the options day, it was pretty flat. I wouldn't say there was too much to go on in terms of easy zero DTE stuff. But we did have, of course, that 4,900 breach still. And you can see here that calls are just stacking all over the place, which is really showing you how, I guess you would say, aggressive this area is for markets. Now, 49.50 and 5K are the obvious targets for the S&P. And while it did pull back, you'll notice that the rest of the market of the S&P, things like energy and financials, held it up pretty well, coming down to a 4,900-ish zone. And we'll discuss the key level, which I think the bulls will want to be looking at from the day trading perspective. Now that we've had Microsoft, AMD, Alphabet, and Starbucks missing, yet look at the stock, it went up after hours. We have seen a lot of selling the rumor, buying the fact on Starbucks, and possibly buying the rumor and selling the fact on Microsoft, AMD, and Google. In particular, Microsoft dropping the least because it did have a pretty good report, in my opinion. And it's had a good run up too at the same time. Now all eyes really are on, of course, Apple and Amazon. With in between, we've got the Wednesday FOMC and the statement. Obviously, the conference is really where you get that huge volatility generally. And then we've got non-farm payrolls. It really doesn't get bigger than this. This is super weak when it comes to overall massive news, overall new trend startings, all of those types of things. And the market seems to have got it pretty right in terms of overall expected volatility. AMD came in at about -6, I think, on the session in terms of after hours. Starbucks is doing pretty much what it said, about 4% up, I think. And Google and Microsoft kind of showing a little bit less on Microsoft, but Google coming in around that 5 to 6% volatility. So get ready for a big event because Meta is 7. According to the options market, Amazon is 6 and Apple is 3.5. So we've got some big moves coming up, and it's just going to get more volatile as we go through the week and we see more and more price action algorithms kind of trying to figure out which way is going to be the forward horizon. And especially if we breach under some big levels, we could see a bit of a flash sell that could come through. Let's talk about big dark pool activity. Fairly large one here on ProShares Ultra S&P 500. Just another kind of largest transaction near the high here. And we already reported this one, which of course was the Crane Shares China ETF. Now it's down a little bit at this stage. It's about here. But we did see this level purchased. I can only assume it's a purchase because it seems like the light kind of buy the dip type of positioning zone. So that's, again, an interesting level, and we'd like to see price move back above that. And we've already been reporting on treasuries, which obviously breached to a new high here, showing that maybe the economy is looking a bit sick and therefore 20-year in particular has been dropping off. We'll check that out soon. We also see here that there's been a definitely large trade going through on a 3x fund for treasury yields or treasuries, and you can see that's happening as of the high. Now, it has been historically a bit of a selling kind of trade in terms of these dark pool activities, but based on the kind of price action we've been seeing so far, you'd have to think it's more in the accumulation side than anything else. Let's jump into the charts now. First up, we've got central bank liquidity, which is flatlining at this stage. Expect that to change by the end of the week. Then we move over to the VIX. Now, the VIX is an interesting one because we didn't see it jump through the last session. I'd say it'll be up, though, in the next session. So VIX possibly spiking a little bit. And the VVIX just kind of dropping, just holding firm. So it's going to be interesting to see how this reacts over the next 24 hours. US 20-year, as you can see here, hitting mean reversion, which is the weekly 20 moving average. And if we go down to the smaller timeframes, such as the 2-hour, it's kind of confirming, and it had confirmed already, that we talked about in our Market Masters Club live stream, where basically we discussed the idea that it was already starting to turn towards the downside. Now, there are some support levels, such as 4.3, but it looks like the market might push down to here and then make decisions based on the FOMC event, etc., and whatever Jerome Powell has to say. Treasuries broke out to the upside ahead of all of this news, and you can see it was quite a strong-looking wick candle. Obviously, that 93, 94 level holding, which we discussed the other day, was a good swing zone. And it looks okay. I've kind of theorized that if the Fed does do the rate cuts and the markets are starting to weaken due to unemployment rising, etc., I could think that treasuries may be at like a 109 target over the next year or so. What about the bonds? The bonds market sat firm in terms of overall risks, and home builders didn't do much. They went up a little bit. Now, of course, we've theorized that this is where weakness may lie in the economy. And at this stage, it looks like a Wyckoff distribution, but obviously it hasn't given us the final sign, which is probably going to move under 92.72. And then obviously the easier one to see is 91. But I think 92.54 would be worthwhile. So I'll set an alert for that so that we've got that there. And obviously we want to see if it makes a new high and how it reacts around there as well. What about transportations? They did drop, but then they rallied back up. Interesting zone, not much to get out of transportations. And our dollar move continues to kind of slightly grind higher. We've still got a 103, 104 target on this. And I kind of feel like it's going to either get like a big spike in it over the next 24 hours or non-farm payrolls will be the one to move this. But I would expect currencies to move big time at some point this week. Whether it's the FOMC event or the non-farm payrolls, those two should be the catalysts. Let's move over to gold. This thing is, it's slow. Gold trading still around the most traded zone. It actually breached out. And you'll notice on the daily, if we go to the daily, it kind of closed right in the highs, but with a big wick as well and getting so close to some of the levels. I'd have to say that I'm still bullish on gold here based on the 2015 level we discussed. But yeah, it's just better than a coin flip. And obviously you want to have as many odds in your favor when you start to place trades. Some interesting stuff going on with US oil where it's holding around this zone. Obviously, if it does breach out past 78 and close on the daily, so you're getting like a 79 plus close, that'll expose 82 to 84. And often, and of course, it'll really push through a lot of that gamma positivity and CTA potential re-addition to oil trades. So be watching that. The area that we had watch reaction here for Tesla did see a reaction, and obviously it was to the short. I would think that Tesla will do something like this for now. And that's what I would kind of hope. And that would be an awesome kind of bullish entry if it did do something like that. But at this point in time, remember this 2-hour 20 moving average has been kind of a stopper for the market. You can see here all the way down through the sells, it's just been finding resistance and selling off that event. Obviously, support becomes resistance, a kind of role reversal style concept, and a critical point for Tesla, but no breach out yet. So obviously, I would say people take profit off that initial rally. What about Microsoft? Well, it was buy the rumor, potentially, and sell the event. You can see here it went up to 413, doing a pretty good session. It went down about 1 to 2% after hours, so it's going to trade around 405 in the morning. And it's still a very strong stock. I mean, I got nothing bad to say about Microsoft. You guys know me. I'm way too bullish on this stock and have been for a long time. But yep, that's still the way it looks like on a chart. If we go over to Google, it was a bit worse. It ended up being at about 140 something, which I think was down about 6. So you can see it was kind of sitting around this 20 moving average area. And this will be a very important day for the bulls for this stock because, of course, it's held this zone once, twice, and then it's rallied down to it. So around here, you'd be hoping bulls come in. It'll make sense with the NASDAQ as we see it soon. But certainly not a good session because it's going to open as kind of like almost an island reversal to the downside. And that's not a positive sign. And it's the same kind of thing we saw in semis, which is obviously where we saw the warning signs coming in that something like this could be on the horizon. Semis in particular must be watched. This is the strongest market sector. I don't like to short it personally because semis are the best performer over the last 12, 14, 15 years. And they've just been absolutely so strong. But they did hit a take profit level, which we've talked about in previous videos. Go check it out. They've obviously island reversed. It's still a pretty weak signal, but you can see volume spiked up here, suggesting that it was activity before all of this earnings. And again, if this starts to get underneath these wicks here, which is a price, if you're watching, it's at 186-ish, that's going to be not a great sign for the markets. We look at the Aussie market. Now, this is a totally different one. I need to bring in copper actually to discuss this, but you can see here the Australian market breaking to a new all-time high. And you might be left scratching your head saying, how the hell is that possible? This is a tech sell-off. Remember, last time it was tech earnings plus FOMC. Australia doesn't really have tech. There's not much technology here. So what we tend to have a lot more of is we've got some red dirt, which we, of course, mine, being iron ore. We've got materials, we've got energy, we've got a healthcare sector that's pretty good. And, of course, we have financials. So if we had a rotation into energy and financials, what's going to do well? Australian market. That's why it's breaching to an all-time high here. And you can kind of think this could be a big deal for it, actually, moving through into Chinese New Year and also following some copper. So copper is one that I'm looking at. We've watched this many times before, but I had a look at this over the last 24 hours and I liked what I saw. So I liked the rally that I saw here in the previous session. I talked about this in the Market Masters Club. And obviously to me, we do need copper through 3.95, but that could be a very big explosion across a lot of materials and in general metals. So we'll be watching copper closely now on the channel and bringing this up quite a lot. And that's going to be important to, of course, the Australian stocks. Here's KWeb just to show you the big transactions that have gone through recently, the increase in volume recently as well. It's been pretty consistent, but there's been a little bit of an increase. And the fact that we're actually pulling back down to this zone, maybe an island reversal would be nice, something like that. But nothing seems to be saving just yet the Chinese market. I'm still positive on it around these zones because to me, it looks like a multi-year low bottoming process. But it's really just the start. So it can take a while. And I think for a trader that says, I hope this happens in 3 days, it's not really the one for you. It's going to be, multi-month kind of process, in my opinion. Now, what about Russell 2K? Well, Russell 2K still looks good. I mean, we breached up, we closed, we got an alert, we rallied down, and then, of course, we found some buyers. So technically, if you're looking at the Russell 2K, you'd kind of like what you see. You'd say, well, it's more bullish than bearish. I guess I still maintain that's kind of how it looks. And there's some importance behind this because, okay, the Qs look terrible. Let me get just so many reds, so many buys and then sells by the end of the day. Not great. But when you consider it, has the NASDAQ really broken through a key level yet? No. Has it gone down? Sure. Is this a level where you would see BTD kind of players try to get in? Yes. And why is this important? Because we find ourselves at a critical point, and of course we find ourselves here right before the Fed has things to say. So yeah, it might be a buy the rumor, sell the fact, but really ultimately we are indebted to the Fed in terms of what they're going to do. So it's a big swing location. And I think what happens here is going to be very important. Day traders are really going to be watching this level with a lot of intent over the next 24 hours. Big support zone for the NASDAQ. US 500 also kind of coming down to a support zone. I've kind of theorized that it's just underneath 4,900 for this one, around that 48.90 zone, which we saw a lot of trade at throughout here. So there's a trend line coming through the back. There's obviously an important level. We saw that big burst up, which kind of was pushing the idea of a 49.50, and the trend is still up. So you'd have to think this is still very possible, and it could all still be part of a buy the rumor, sell the fact that may take 1 to 2 weeks to play out. Remember that Feb 15th thing as well. So if it takes 2 weeks, that would be actually in line with a lot of the seasonality we tend to see. So US 500 still not really a big short yet until it gets through some of those levels. Just a lot of warning signs, etc. Let's now move over to Bitcoin, which did sell And it's found actually what I would call a small time frame change, which was up in here. So you could have, if you're a real scalper or day trader, you may have already been short in this. From a swing trader's perspective, you're really not going to care. You're still going to remain long in this thing until underneath 41.5, and that's because down here is the most important level. So really down underneath that, okay, we can extend further shorts, 36, 28, even possible 29. But at this point, it still is a series of higher highs and higher lows on the main timeframes, and only the really small time frame change towards the down. So if you're looking at a 5-minute, 15-minute chart, yeah, they're definitely on the downward spiral in terms of where Bitcoin's at. Do remember, we've got big numbers coming in. FOMC statement and federal funds rate, which is expected to stay the same, but if it doesn't, get ready for fireworks. And of course, the press conference. Remember, this often is like what moves one way and then moves the opposite way. Really, the press conference is where you tend to get that more, I guess you would say, volatility come through. And do remember as well, if you don't like volatility, it's going to get worse. Thursday, big earnings. And then Friday is jobs numbers. So it's not going to get any less, guys. It's only going to get more as we approach, some big question marks as well about how bad are the jobs really getting. We've seen sackings across the board. We obviously expect unemployment up. The Fed's kind of engineering that at the same time. But is it worse or is it just the beginning? All right. Thank you so much for watching. If you enjoyed today's video, please remember to subscribe, smash that like button, guys. And I hope you've been enjoying the content we've been bringing you. There's a lot of research in here, but I'm always appreciative of people that send me the memes, people that send me all little bits of research and stuff that they've found. And if you want to do so, you can jump on to our Discord and obviously share it with me. Thanks so much. Bye for now.